buyers have really pulled their bids back on junk silver. Junk silver now, if you're going to sell it, you're looking at $2.50 or $3 below spot. The only silver above spot in North America are silver eagles. I think they're about like $1 over spot. But people are concerned that, oh my gosh, I'm not going to be able to sell my silver. Well, understand that when all this silver that's been sold, all this junk silver, that's been melted down. And of course, they've not made any silver dimes or quarters since 1964. So there is no more supply, and the supply that has existed, any of that that's being sold, if you're selling it at $2 or $3 under spot, I guarantee you your wholesaler is sending that to a refinery and just picking up the 3, 4, 5% VIG and putting that in their pocket. Understand that can't go on forever. And also, there are refiners now saying they're not accepting any more silver because they've been inundated, and it's a physical process. It's not like pressing a computer key and boom, it's done. They actually have to refine it out. They've got to refine the 10% copper out if they want to get it to 99.99 pure.
Yeah.
So while right now it feels a little bit, maybe did I make a mistake buying junk silver? No. If you wait a month, 2 months, 3 months, and this is assuming the system continues and does not collapse, in the future, in my opinion, junk silver is going to end up holding the highest premium of any form of silver in North America because the supply is being wiped out whenever anybody sells it. It's being destroyed. It's being melted down.
Wow. So that's a good tip and insight. So I want to take it back to a potential market shutdown. Why would a failure to deliver in a metal like silver create a widespread effect of shutting down the entirety of the markets? Why would the stock market shut down and all these other markets shut down? If there's
Right. Well, first off, that will bleed over to gold, and gold will also fail to deliver. Understand that gold and silver have been suppressed. The prices have been suppressed literally for 50 years, since 1976 when they started with futures and options on metals. Understand that gold has been suppressed because it is the direct competitor to fiat currencies, whether it's the dollar, the pound, the euro, the yen, whatever fiat currency, gold is the direct competitor. Now, if let's say 10 years ago, gold didn't stop, or 15 years ago, gold didn't stop at the $1,900, $2,000 level, and it blew through, and it got to 4,000 like we are now, and then it moved to 6, 7, 8,000, and started spiking. What that tells you is it's not gold going up; it's the fiat currency that's losing value. So that spills out, and it becomes a loss of confidence, and that would have and will prevent the U.S. from using a credit. It would prevent or preclude the U.S. Treasury and other treasuries that borrow, but the U.S. in particular, that has had an unlimited amount to borrow on the credit card, and thus we've got $38 trillion. It would cause interest rates to go up. It would just gum up the entire system, which would then gum up the real economy. But it would be extremely difficult for finance to continue as finance has continued, because it's been a Ponzi scheme, of credit, and it would cast a dark shadow on credit. Meaning, am I going to get paid back? People will be wondering about the credit system, and that's a problem. And you and I have talked about this before. Everything runs on credit. The entire financial system runs on credit. The real economy, everything that you touch, everything that you do every day has, credit has touched it in one way or another for that have been created or be able to work. So it's important to understand that silver being such a small market, it's been very easy to manipulate. And they had to manipulate silver harder than gold, because if silver ever got on hand, then gold goes. And if gold goes, then you have confidence breaking. And understand it, you were talking about derivatives. It's a zero-sum game in the OTC derivatives market, where there's over $2 quadrillion worth of paper or contracts. The problem with that, because it's a zero-sum game, if you have a huge winner, that also means there's a huge loser. And was that loss big enough to put the loser out of business? And if the answer is yes, then the loser can't pay the winner, which means the winner then becomes a loser also.
Right.
And that will spread across markets everywhere. That'll spread across credit markets. It'll spread across stock markets, equity markets. Interest rates will explode. That'll destroy the ability to carry real estate on debt. It's a seizure or a meltdown of credit is what we're facing.
Is there a chance that they can put the kibosh on this for a little while longer? I've been watching some of this overnight trading on the precious metals, and last night you had, or a couple of nights ago, you had silver smash down from 53 down to 50. Last night you also had another smashing down. It looks like they are trying to put the kibosh on it, but it's been an unsuccessful, fruitless endeavor. It's like going back to the well over and over again. Each time you go back to the well, it's less effective than versus a previous time. Is there any chance that they could, maybe kick this can down the road a little further, or have they used every bullet in the chamber, so to speak?
Yeah. There's always a chance, because you used the word for a while. For the end scenario, mathematically, no, they cannot fix this. They can't kick the can down the road. It's here. It's now. They're using their old tricks. They've raised margin on COMEX, which they've done many times before. They raised the margins and then forced the longs out because they can't afford the margin. They sell. I think the other day, in an hour's time, they sold something like 20,000 contracts. That's a huge amount of silver, and that silver does not exist. Remember, it's 5,000 ounces per contract, which I think that number worked out to be about 1 billion ounces were sold. The world only produces 800 million, 850 million ounces collectively in a year's time.
Yeah.
And that's only $40 billion today.
Yep.
The global production of silver, even at all-time high numbers of $52, $53, is only just over $40 billion. $40 billion is a laughable number today. 15, 20 years ago, it was pretty big money. I can tell you, back in the 1980s, early 1990s, the biggest takeover, the two biggest takeovers in the mid 80s was Texaco and I think KKR. One was 13 billion, the other was 25 billion. So yes, while the numbers are bigger today, but today you're talking about companies being taken over for, many times $40 billion. And there's plenty of individuals that are worth over $40 billion.
Yep, a billion doesn't go as far as it used to. You could probably just find like some random crypto shitcoin out there that has a market cap of $40 billion. It's not anything extraordinary, much to your point. Bill, at the start of this program, we talked about some of the shortages we've been seeing in China. Some bullion dealers selling silver. For the bullion dealers that do have it in China, selling silver upwards of
just one.
Just one.
Yeah, just one bullion dealer.
That's selling it for $128 an ounce.
Right, and as I understand it, that's the only bullion dealer that is selling silver right now. I haven't verified it. I don't even know if I can verify it, but that's the story.
So does it ever become a reality soon that the price begins setting, that China begins setting the price here for silver moving forward?
Yeah, they absolutely could set the price. I mean, think about it. If China has an official policy, let's use that number of $128, that they'll sell you. Uh, if the price becomes $128 in China, why wouldn't someone buy off of COMEX or buy off of LBMA and turn around and sell it in China? I
Geo
mean, that's
arbitrage.
the
Yep.
definition of arbitrage. Yeah.
Well, I mean, so if that does play out, would we eventually see an equilibrium between London, New York, and China when it comes to the pricing mechanism?
Yeah, if markets stayed open, of course, the markets will level out. What will happen is they'll find a medium, and if China doesn't bend, and this is something my late partner Jim Sinclair used to talk about. He said uh, he could foresee the day where China would say, "Okay, gold's $50,000 an ounce. It's bid at 50,000. It's offered at 50,000. What do you want to do?" So if they peg the price or set the price at $50,000 or in yuan or whatever, but equivalent of $50,000, then what is the price worldwide? It's got to be $50,000 because that's the market. I mean, money is going to flow where it's treated best. And if the West is at $4,000 gold or $5,000 gold, and China's buying it and selling it in whatever quantities you want at $50,000, that then becomes the price. The problem with that is if you jacked up gold prices 12-fold from here, or it wouldn't even have to go 12-fold, it could go less than 100% from here to break. That would break the contracts. That would break the market itself because like I said, for every winner, there's a loser. And can somebody lose 12 times their money and stay solvent? No, they can't pay the winner. Then the winner's a loser. And then the people who are doing business with either the winner or the loser knows they're both dead. You're going to do business with them? You're going to trade with them? No. And that's I mean, I'm not looking at this and saying, I think this is what could happen. This already happened back in 2008, 2009 with the Lehman Brothers problem. And it took, and think about this, it took only $700 billion in TARP and another, what was it, 16, 17 trillion that we found out 2 years after the fact that the Fed sprayed all over the world, more than half of that to foreign central banks to keep the system floating. And think about how crazy people went over the $700 billion. I mean, people were wringing their hands for 3 or 4 days because $700 billion is a crazy number. Well, $700 billion is like a broken potato chip that falls out of your pocket now. Who's the white knight going to be? I mean, 16, 17 trillion is not going to fix the problem. Who's going to step up and save the ECB? Who's going to step up and save the Bank of Japan? Who's going to step up and save the Fed? Now, I mentioned the ECB, Bank of Japan, and the Fed. Guess what? They all have negative equity. They're all technically insolvent because the bonds that they already own are underwater to the point where their equity has already been wiped out.